Real Men of Real Estate with Steve Matley, construction manager and real estate developer, business owner, and educator.
Did you know that right now there's 22,000 units deficit?
Tunde Ogunwole, real estate development professional, Naval Academy grad, and veteran with a deep understanding of the public sector process.
All of us want to live in thriving communities.
Brian Fox, real estate expert and investor, dedicated to helping hundreds of clients make money in real estate every year.
There's so much housing going in.
The builders are begging for more land.
Future company can come in, lease up space to employ those people who are living in the homes.
We have to put the housing in place.
That either have to have houses,
They want to make sure that there's a strong employment.
logistics centers, things like information hubs. We are a shipping economy now. There's economies all over the country where their prices are doubling and tripling. Welcome everybody to Real Men of Real Estate. I am Brian Fox, your host for the day, and today I am joined by Steve Matley and Tunde Ogunwole, and today we are going to focus on the ABCs of commercial real estate. Tunde has shared some thoughts with us, and we thought it'd be great if we shared them with all of you, as is very pertinent to what's going on in our economy today. So without further ado, I welcome you both. And Tunde, would you like to go ahead and kick it off and explain a little bit about what's going on in this world of commercial real estate?
Fantastic. Thanks a lot, Brian. I think it's always exciting when I have an opportunity to talk a little bit more about commercial real estate. I have a certain focus in commercial real estate, which is mostly industrial, every now and again office. But a lot of people have asked questions about what's happening in the market, and they typically think about residential. In this presentation today, I'm going to talk a little bit about the different aspects of commercial real estate. So let's get right into it. So one of the things to just basically understand as it relates to commercial real estate, it's any property that's used exclusively for business or provides a workspace other than a living space. Often in commercial real estate, the product is actually leased to a business. Everybody pretty much understands that. There's a whole range of commercial real estate. One of the things that we're going to focus on today is we're going to look at the office space. We're going to look at retail, hospitality, and industrial and see how they're the same and how they're different. Now, one of the things that people tend to recognize in commercial real estate that I think is pretty interesting is obviously the exterior facade as you're approaching it. Most of us have been to a shopping center or we've been to a retail location. Haven't gone to a lot of them a lot lately, given what's happening in the world as it relates to the pandemic, but we're all familiar with going there to transact and buy goods and services. That's typically dominated in those shopping centers or strip retail. We'll talk a little bit more about that. The second building type that we talked about is my favorite, the big box industrial. I'll talk about the difference between a strip center and a big box industrial or infill product, because there tends to be some similarities, but there are a lot of differences between that product. And then obviously hotel and hospitality. We talked about that in previous episodes, that's gone through a bit of transition, but it's also important to understand how those dynamics work together. And obviously the office building. Many of us have worked in traditional Class A offices or Class B offices and have seen that space is going through a little bit of transition. So we'll kind of talk through that. Retail and shopping centers. When it comes to leasing in retail and shopping centers, I'd say that there's some of the more complicated nuances because they're in those leasing environment. Typically, the anchor tenants control the leasing activity. Brian, I know that when it comes to real estate, you often work on leases and for sale transactions. Do you want to talk a little bit about the activity that you see residential so I can compare the difference between how a strip center works?
Sure. So for me personally, on residential, those leases are very simple. We do not touch very many vacation rentals. Those typically will be handled by a management company or a site such as Airbnb or VRBO, vacation rental by owner. What we do is typically rentals anywhere from month to month residential up to 2 and 3 years. I rarely see a lease ever go past 3 years on paper.
Fantastic. And on these strip shopping centers or outlet centers, you typically see sometimes the pop-up shops in the month to month, sometimes they go up to 5 years or even 10 years, but they often have more complicated nuances because they're related to the tenants that are next to them. They have brownout provisions, they have going dark provisions for other anchor tenants where you could possibly break rent or adjust the leasing terms based on the activity of the people who are next to you. So those transactions are a lot more complicated, and especially now what's happening in the market, you're seeing a lot of owners really revisit what's in the lease as well as the tenants themselves. Many of the retailers, if they can with their business, are actually shifting to being an e-tailer and trying to change their business model a little bit. But both in the retail space and the shopping center space, there's definitely been a lot of transition as it relates to leasing. Hotel and hospitality, we've often talked about the fact that not only has there been what we call the great pause and a limiting on movement, there hasn't been as much travel and tourism because we've all been staying at home. It's highly dependent, it's daily transactions, short-term transactions. So what happens in the hotel hospitality factor is it really is based on how much disposable income and movement that businesses and individuals have. We've mentioned that before, that there's been a lot of transition that's going on in the market. We haven't seen a lot of the hotel assets go up for sale yet, but we do know that some of them have gone into single-digit occupancies for an extended period of time due to the great pause. And so on the hotel hospitality side, there's been a lot of transition, and we see that those transitions could signify some opportunities for people who are either syndicating funds or work for sophisticated investors. They might be looking at the hotel asset and trying to figure out a way to buy it at the right price and maybe repurpose those hotel assets. Office building. Typically, when I work on an office building, they're low rise being a 3 to 4 story high building, or up to a mid rise, up to 9 to 10 stories. High rise usually is somewhere higher than 15 levels. As we've talked about before, in the office building, it's heavily dependent on the businesses being able to bring their tenants, bring their workers together. One of the phenomenons that was happening a lot in offices is amenitization and collaboration. A lot of the newer office buildings were really trying to figure out a way to bring in more amenities, to increase the social activities, amenities such as play areas, outdoor conference rooms, better utilizing their common spaces so that people would interact and socialize. They would often bring in retail uses into office buildings. Obviously, some of that activity is not only stopped due to the great pause, but most of the architects and owners are reevaluating what's happening in the office market. So that's another opportunity to really understand what type of transitions are going to occur. As a thumb rule, many employers were really looking at somewhere in the 80 to 100 square feet per employee range as they're leasing up office spaces. We think that those norms are probably going to expand as the world's really adjusting to these social distancing and physical distancing requirements. Industrial and e-commerce, this is kind of my high fastball, an area that I enjoy the most. I typically work on big box industrial. My product area and specialty is out in the Inland Empire, where there's, for the last 10 to 15 years or so, there's been a lot of available land to do 500,000 to 1 million square foot and beyond big box industrial e-commerce facilities. The major move that's happening in the market, you can see that a lot of people are transitioning their behavior to ordering goods online. In the industrial space, you tend to see either the designation of fulfillment center, where it has a lot of product in the building, or distribution center. The product is stored in the building and then it's sent out to various retail locations. Steve, I know that you and I both work in some similar areas out in Riverside. Do you want to touch on some of the things that you're seeing on the land side and how that relates to industrial and e-commerce?
Yeah, well, interestingly enough, last week there was an article that came out that said that offices were beginning to look at moving out of the urban centers and back into the suburbs. You know, for years they moved into the urban centers because people were moving into the urban centers. There was about a 20-year shift out of the suburbs into the urban centers. It's moving the other way, and a lot of that was because of the pandemic and the experience people went through. And I had kind of suspected that may happen, but the trends are actually showing that is where things are going. And over 75% of the commercial industrial construction in Southern California is happening in the Inland Empire, San Bernardino, Riverside counties. And a lot of them are those logistics centers like you're showing, all the major retailers and the distribution online sellers. What that looks like there is, you know, I work in the getting land, and we entitle it for the homes. It used to be when people moved to those areas, they were buying a home for a lot less than they could in the city and then buying their home with commuting time. 60, 90-minute commutes each direction to get into the cities. Now, because of what's being built out in the inland area, there are high-paying jobs there. And so now they are 20 minutes away from major job centers instead of having to drive into the coastal counties where the urban centers are. There's a lot of jobs in these type of environments with the fulfillment centers, distribution, the logistics companies, DHL, FedEx, UPS, shipping in and out, Amazon. And those two things tie together. And I think one more piece of the puzzle is the fact that a lot of people discovered they don't have to go to an office to be effective at work because they had to work remotely. And so I think now that frees people to go buy less expensive property. You know, for $100,000 to $200,000 less, you can buy a larger home in these suburbs than you can in the city areas. And I think, and that's especially the closer to the water you get, the more expensive it is. So I think that's where I see the trends are moving at this point in time, both in the industrial that you're building and the residential that my company provides.
Yeah, fantastic. And I think you're right. One of the things that a lot of people are looking at is affordability. And you kind of talked about that. Bringing it into the urban core can be less affordable for a lot of folks, and bringing out buildings like the industrial e-commerce out to some more affordable places where they can cut down on commute times. They can have that live work environment closer to home out in the suburbs or exurbs, so to speak. I think we've seen a positive trend. The e-commerce trend has really picked up. In the last 5 years, people were modeling a 3% increase year over year in terms of buying behavior. We obviously saw in the great pause that increase spiked significantly. A lot of people were going to the Amazons, the Walmarts, the Targets to be able to order essential goods and bring them to their home. So over the last 3 months, we've seen the online trend spike to 40% increase over 2019, and we expect more of that behavior to continue. One of the things that e-commerce users tend to look for is what's the existing job demographics looking like in the market? And if they have an opportunity to bring new jobs into those communities, they really see that as an opportunity to ingratiate themselves with local politicians. It feeds some of the residential demand that's needed in those communities. And we're obviously seeing a lot of migration into e-commerce and industrial. It's seen as the favored product class by a lot of investors. They're shifting away from some of the other shopping centers, retail locations into e-commerce.
Yeah, the hospitality and hotel industries are interesting right now too, because of the pandemic. You know, they're opening, but they can't have full capacity. So I see a lot of restaurants that aren't going to reopen, and I see a lot that are on the, how would you say, lower check average that really rely on volume. And when you can't fill up all those seats, it's not very viable. So you have an option. You have to go either to complete, more takeout servicing, which is hard to compete with the fast foods on that level, or you have to go to the really high end where you have such a high dollar per ticket that you have the exclusive environment, and that's what people are paying for. So they're willing to pay a lot of money for the food to be in that environment. And I see that mid-range restaurant may be a casualty of all this, become extinct, because they cannot get the volume on the dine-in volume they need and still adhere to all the regulations of the separation and the space and those type of things. I think we're going to see a major shift in that. I think we'll see a major shift in the way hotels operate too coming out of this.
I think you're absolutely right. Before I kind of wrap up, one of the things I want to direct people to, obviously we want people to continue to watch and pay attention to our show, but if you're looking for resources in each of those 4 product types that I talked about, one of some of the major organizations that govern those behaviors, we talked a little bit about shopping centers. ICSC is considered to be one of the best trade organizations for learning about the shopping center and retail market and what's happening there. So we encourage people to look at their website. If you're not a member or you want to learn a little bit more, ICSC is one place that I would strongly recommend. If you're interested in the hotel and restaurant space and you're looking for hospitality, I think IRA is one of the better organizations to get an understanding of what dynamics are happening in that product type. Globally, if someone's looking for a little bit more information on commercial real estate and they're more of a generalist and they're looking for people of many different product types and backgrounds, brokers, engineers, architects, consultants. Urban Land Institute tends to be one of those organizations where a lot of people congregate. It's a tent type organization. They have a lot of white papers and research on what's happening in the world. And so that's a resource that I think a lot of people should get connected to. And then NAIOP, you could see here on my screen that I actually continue to listen to new information, not only some of the content that's in NAIOP, but it does have a lot of terms and industry definitions. If somebody who's wanting to become a practitioner and wants to understand a little bit more about what language should I use to describe activities. If you're looking to invest, I encourage people to really access NAIOP's website and look at their industry terms and definitions. You could even download it and have it for quick reference. And so, yeah, I think this is a great way to get people a general understanding of not just commercial in general, but understanding those 4 different product types and the activities that are happening within.
All right, fantastic. So with that, we are coming to a close on our first episode of the ABCs of commercial real estate. Once again, this is Real Men of Real Estate. We thank you. Tunde, great presentation. Thank you, brother. Really appreciate that. And as always, I am Brian Fox and Stephen Matley, and we will be right back with you on another episode this coming week. If you have any questions for us, please feel free to reach out, realmenofrealestate.com. We will see you next time.